Hello traders, and welcome to Hit the Mark Trading's daily TF Russell 2000 Futures Review. My name is Martin Rimes. Today's date is Wednesday, January 8, 2014. I want to ask you to please check out hitthemarktrading.com. Take a spin around the different pages and figure out what we do. While you're there, go to the contacts page. Sign up for weekly blog updates. You can sign up for Rooster Call. I'm providing this free beyond 30 days. And basically, it's an early morning look at the market. I'm looking at the charts. I'm looking at some fundamental news. Making a very brief report for my clients to read and get prepared for the day. Sometimes I will have a bent toward the day trading that people should be aware of, like today. Just exercise a little caution on crude oil. Let price break out the tight range. That was the message for today. I send this to clients. I'd like to send it to you for free. Now remember, everything I mention in this recording is for your educational purposes only. Please do not construe anything that I mention as an offer to buy or sell any type of index futures or options on index futures or ETFs. Let's go to the charts. Okay, here's daily TF. Gosh, look at this. I'm going to blow it up for us. 1, 2, 3, 4, 5. 5 days of nothing. Okay, so here it is, this green bar here. This is New Year's Eve. And now we had 5 days of nothing. What is going on here? Okay. Well, we talked about this this support is holding here. But where's the conviction? Okay. Now, this green bar here, today's action, it does show that we're a little bit here above yesterday's high. And so this is, in a sense, a follow-through. It's just that we'd like to see a little bit more than something so incremental. Now, we are trending. I do measure the trend on the EMA, 34 EMA. We are certainly trending very strongly here. Okay. Now let's look at the indicator. Okay, well, we started going up, then we went flat. So I'm going to draw a line here. All right, now here's that pattern once again, that potential pattern, that if we break the horizontal line, suggests that we could drop back down. And if we drop back down, it could possibly go all the way to the moving average. There's also a floor pivot there. So we got to see what happens. I think the reason from a fundamental perspective that we're flat is because you've got two major events coming up. On Thursday, you've got ECB, European Central Bank, announcing monetary policy. And then you've got on Friday the employment situation report, which is the mother of all economic reports globally. So ADP came out and said there was better than expected job hires in the private sector. That's a precursor to Friday's report. One would think that if we get a strong report from the government, then we should power higher. The only problem with that, and the reason it's a wild card, is because these traders are scared the Fed might reduce quantitative easing rapidly. So that's why they're worried. The better the economic data gets, does that mean that the punch bowl will be taken away? So it's really a tough call. At this point in time, it's nice to see that yes, we closed above the high of yesterday. However, we didn't even make to the high. Okay, we closed above the close of yesterday, but we couldn't even get to the high. So it's a very weak action today. Okay, weekly chart real quick. Nothing special. I'm sorry, nothing special. Trend and momentum, absolutely gigantic, strong, strong wave, okay? All right. Market's just looking for some type of a catalyst. That's all it is, looking for a catalyst. Let's go to the range bar chart now. Okay. Here we go. We got this. Okay, we had a down move in the pre-market, and at 9:30, look what they take it right back up, and then all of a sudden, boom, resume the trend. Okay, how can I say there's a trend? Well, remember we had this line drawn. Okay, so drop it down, and then all of a sudden, 952 area, for whatever reason, they decide, let's run it back up. Okay, so it's basically a lot of choppy action. A lot of choppy action, okay? We need to expect, and you should write this down, anytime you're going to get a Fed minutes release and there's lots of motion surrounding it, you need to expect that we're going to go sideways. Where's 2 o'clock here? Okay, so that's all we did. We went. And 2 o'clock came, and then still didn't know what direction to take it. And another one of these famous afternoon saves after 3:30. Suddenly, money walks in and says, okay, we'll buy. Okay, so very much indecision today. Okay, all right. Perhaps we'll get something better tomorrow. Let's look at the floor pivots. My arrow. All right, likely to touch here, and then from there, it's really going to depend on what happens with the euro. It really is. If the euro falls, typically that's not good for risk on a global scale, but we'll just have to see tomorrow. But tomorrow could be a one-hit wonder, knee-jerk move. Hard to tell. The ECB, second largest reserve bank, when they speak, it's going to move the market, so it's very difficult to tell. That announcement comes out at 7:45 Eastern Standard. I'll talk to you tomorrow.